And welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will explain the concept of stagflation, and afterwards I will give an update to my portfolio as well. What is stagflation? Well, stagflation is short for stagnation and inflation. So if we start by looking at stagnation, stagnation refers to the concept of slow to no growth. Usually it is defined as a less than 2% growth in the gross domestic product known as the GDP, and it often involves a substantial amount of unemployment, meaning high unemployment rates. If we then look at inflation, well, as an investor, inflation is your mortal enemy, because that means what you can buy for $1 today, you will not be able to buy the same goods for in the future if you have a rising inflation. A good example of where we are seeing rising inflation currently is something like the copper prices. So just to illustrate here, I went into macro trends and searched for the copper price, and if we just look at the last 5 years, we can see that the copper price bottomed out at the 16th of March as $2.17, and that the price has more than doubled for today's level, meaning that we are now trading at $4.50. So this is a very good example of a really high inflation in a specific commodity. So why is it relevant to understand this concept of stagflation? Well, if you believe that we currently are in a stagflation scenario, meaning that we are seeing slow to no growth in the economies and that we are seeing an increased inflation, what can you then do in your portfolio to try and protect your investments? So to answer that question, you could for instance go to Investopedia, how to protect your finances from stagflation. So one key takeaway could be something like, if your portfolio has a more aggressive investment or is not diversified and it appears as if the economy is approaching a period of stagflation, it may be time to decrease your risk. Or you could say, a sound and long-term financial plan is the best way to protect your finances from stagflation. If you have been living within your means, stagflation should have no major impact on the way you live your life. So what have I done in my portfolio if I were to expect stagflation? Well, first of all, you can see that I'm very well living within my means, since I am capable of setting money aside every month to invest. And I can afford to have my money invested for at least a decade. So I have a very long-term plan. The next thing is, you can of course argue how much risk that I should have in my portfolio by looking into each individual holding and saying, well, if the company is not making a lot of money today, but they are expecting to make a lot of money into the future, perhaps you would prefer companies that are actually making a lot of money today, since there is less uncertainty about how much they will make tomorrow. So this very naturally leads to taking a closer look at the portfolio. So the first thing we immediately notice for the portfolio is that there was a green circle for this week's episode. And since I didn't post a video last week, let's go and take a look at the portfolio value, because also last week there was supposed to be a green circle since the portfolio was up $500 compared to the week before, and this week it is actually up $2,200. The next thing that you immediately notice is that the cost of the portfolio is down, and it was already down last week. Well, how can I have reduced the cost of the portfolio? So if we go back to the overview arc here, you can now see that I have a higher cost for my cash, but at the same time you can see that I hold much more cash than I used to. This is due to the fact that I have sold out of 2 companies. And the 2 companies which I have sold out of is Prudential Financials, where I have sold all my shares. This is due to the fact that I'm still trying to withdraw my money from Revolut and invest them on Nordnet. The second share which I have sold out of is General Dynamics. However, I have not sold all my shares. I have just sold the part which I had on Revolut, and that is also why the percentage gain of these shares has gone up so much without the share price increasing drastically. So you might ask, how come this is possible that the percentage change is so large now? Well, if you haven't watched episode 83, what is FIFO, then let me once again try to explain it, because now you can really see it in the portfolio. So if we head over to an Excel spreadsheet, let me try and explain that. So, in order to explain the concept of FIFO, meaning first in, first out, we can use this example with General Dynamics from the portfolio. So you can see here that originally I have bought a little more than 14 shares on Revolut on General Dynamics. I paid 2,500, I sold them for 2,900. That gives me a purchased price per share, meaning my bought price divided by the numbers of shares, of a little more than $177 per share. And when I sold them for 207.82. And the remaining shares which I have in General Dynamics, meaning the remaining 26 shares, I paid $4,004, giving me an average purchase price of $154. So in the portfolio last week, you saw that the average purchase price of my shares in General Dynamics was $162. But since I have now sold all of the shares, which I have paid $177 for per share, that means that I have lowered my average from $162 all the way down to $154. And that is why when you look to the Google sheet, that the percentage gain in General Dynamics shows up as a much larger number than what you would have expected when you just looked at how much the share price has gained within this week. So this explains the percentage gain of General Dynamics. And if you were wondering why the cost of my cash has increased by $8,500, well, if you now go to the History tab, it has been updated with the purchase of General Dynamics, where I have bought initially for $2,500, as you just saw in the Excel spreadsheet, and sold for $2,900. And at the same time, you can see that my purchase price for Prudential Financials was $6,000. So that is the total of $8,500 for the cost of my capital, or the cost of my cash currently, as you can see here in the overview. So that means that currently I have a little more than $12,700 sitting in cash, which I am ready to invest. If we then continue to my favorites tab, namely the dividends tab, well, these last 14 days has been quite remarkable for me, since I have received 2 dividends, one from Cardinal Health, but perhaps more importantly, I have received a dividend from Store Capital, which is the biggest dividend contributor in my portfolio, since I have received a little more than $175. So now in October, I have now received more than $500 in dividends, which I am of course very happy about. So if we zoom out here, just to get a better overview, I like to compare the month I'm currently in with the month that is 3 months prior, meaning we are comparing October to July, since I have a lot of quarterly paying dividend stocks in the portfolio. I think that makes the most sense. So the biggest difference between July and October is that I have added VG into the portfolio, which paid me a little more than $100. So you can see that makes up the majority of the difference between July and October. And the next thing you can easily see here is that the estimated yearly income is now down below $5,000 again. And this is due to the fact that I sold out of Prudential Financials, and that I have partially sold out of my position in General Dynamics. But once I reinvest my more than $12,000, this number will for sure continue to grow. So now that you know more about what stagflation is, I will of course leave links in the description below to Investopedia and to macro trends, just so it's easy for you to go and read more for yourself. And you have seen what you can do to protect your portfolio if you believe that we are in a stagflation scenario. that actually wraps it up for yet another exciting week of the Lazy Money Game. So if you enjoy content like this, then please consider leaving a like or comment on the video, or consider subscribing. It really helps out a lot. And until I see you next time, bye!